Stephanie Berthelot and the crew at SR Enterprise can handle it all, from sheetrock to texture to paint. Give Stephanie a call at 504-432-9284. SR Enterprise, where they spread the paint and you spread the word. Tiffany, thank you for being here. We met through our affiliation with the Livingston Parish Chamber of Commerce, so we're going to talk about your work with them. We're going to kind of circle around to that. I want to get into to your business, obviously, HomeKey Mortgage, and I also want to talk a little bit about you personally, dig into how you feel about the mortgage lending industry is performing, especially with the pandemic going on. And so with all that, welcome Tiffany Sicard.
Thank you for having me. Happy to be here.
Well, you're very welcome. We're happy you're here, and we want to talk a little bit about your background. You're obviously a mortgage lending guru, but we want to talk about how long you've been in the industry and those sorts of things.
Well, I've been in the mortgage industry for about 22 years now, and
prior to that, what did you do?
Well, straight out of high school, I started at Louisiana State Troopers Association doing some co-calling, basically telemarketing, I guess is what more people refer to it as now. Kind of where I picked up a little bit of sales and interaction with some folks. And then from there, I went to work for Hibernian National Bank. Kind of got the financing end of that. They're Capital One now. From there, I was introduced to a young man who owned A1 Mortgage Services, and within his company, he had a telemarketing firm. Basically, people were calling homeowners to try and help them save some money. And from there, I was offered a position within the company to be a loan officer. And here I am now, 22 years later. I've pretty much worked every aspect in the mortgage industry that you can think of. I have been the loan officer. I have been the sales manager. I have been the underwriter, the processor, pretty much every position. But I think it's also helped me learn how important everyone's job is, especially when wanting to fulfill my dream of owning my own company, being able to understand what my team has to go through on a day-to-day basis, and just kind of understand their position and what we do to make sure that we're as efficient as possible.
Yeah, definitely. And congratulations on that. Obviously, all of us here are thrilled that you were able to kind of realize your dream of doing that. You're a leader. You're a strong businesswoman, and so we're going to dig into a little bit of that as well. Before we do, I want to kind of get some mortgage industry questions out of the way, some things that someone that's not knee deep into that industry may or may not understand or know. One of those things is the many different types of mortgage loans that are available. You have VA loans, you have conventional loans, you have FHA loans, you have rural development loans. So tell us a little bit about each of those. We'll start with FHA. What type of loan is that, and who does that benefit?
FHA loans would, in my opinion, would help someone who may have had some credit challenges or things like that, because there's not as much red tape and overlays on those types of loans for someone who doesn't have a whole lot of down payment. So it helps them basically get into a home if they've had some credit challenges in the past with as little as 3.5% down. If they haven't had any credit challenges in the past, it can also help them with just having a lower down payment to be able to get into a home versus conventional, which sometimes if you're over certain income qualifications. You don't qualify for their 3% down payment programs that they have. You may have to come up with 5 or more. Just depends on each individual's really what they're wanting to achieve.
Sure. Yeah. And it's good to know that there are options out there. I mean, things happen in life. People might go through a struggle like a flood, for example, that may have wreak havoc on their credit for a little while. And it was something that wasn't even necessarily their fault. So it's good to know that they have loans for people maybe that had a tough situation that had an effect on their credit. People go through divorces, which cause, in some cases, credit issues that may or may not be directly related to them. So it's good to know that loan's out there. Let's talk about VA loans for a little while. So VA, obviously, most people are going to tie that right into the military. I know it's a military loan, but what are some advantages for military guys and gals that may be looking to get home finance?
Well, a VA loan, just depending on the individual's certificate of eligibility, it can qualify for a veteran or a spouse of a surviving spouse for a veteran, basically, and you can get 100% financing depending on that certificate of eligibility. They may qualify for an exemption of the upfront funding fee, or if they have to pay the upfront mortgage funding fee, they roll that into your loan amount to where you're still getting 100% financing, but you don't have any monthly mortgage insurance. So when I say mortgage insurance, that's not homeowners. I have a lot of people that get that confused, especially someone that may be a first-time home buyer, someone that's just looking into mortgages. But basically what that is any type of loan that you put less than 20% down, unless you choose an option of doing upfront mortgage insurance premium paid at once. You have to pay a monthly mortgage insurance premium until you have at least 20% equity in your home. With a VA loan, you will never have that monthly mortgage insurance amount. So basically, a veteran or someone who qualifies for a VA loan could basically get more bang for their buck as far as qualifying because they don't have that extra expense added to their monthly note for mortgage insurance.
Gotcha. And that's a big deal. And for these graduating seniors that maybe they don't want to jump right into college, but they want to serve their country, there's another option and reason to join the military is to take advantage of these type of loans. It's almost like an incentive, from the government. You serve your country, and we're going to offer you this as a trade-off. And I do know some guys that got into the military right out of high school. And if it wasn't for doing that, they wouldn't have been able to get it home. So it's a good program. Now, rural development. Here's one. I have no idea what this is. What is a rural development loan?
A rural development loan is basically it's an RD loan. And it basically gives you 100% financing to where you can borrow basically up to 100% of not only the sales price, but of the appraised value. So say you have someone that's looking at purchasing a home and it comes in appraised for a few $1,000s more than what it's selling for, and the seller didn't necessarily agree to pay all of the closing costs. So you can actually purchase the home for the sales price amount and actually roll in some of your closing costs as long as it appraises for a little bit more, and not have to worry about the extra money out of pocket. So that way you're getting really 100% financing.
Wow.
So that's just an option on the table there. Most oftentimes we do have sellers that cooperate, especially if they know someone is doing an RD loan, and assist with the closing cost. But a lot of times, especially now, since a lot of areas were rezoned, I've had customers that fell short with that as far as what the seller could contribute. And the house did come and appraised for a little bit more. And they ran into issues where they were a little short of funds for closing because it needed flood insurance. And some of those premiums can be quite hefty. So it allowed them to be able to roll in some of that extra money that they didn't necessarily have set aside or in their account to be able to take care of that extra expense that they weren't expecting.
That's interesting. And in this area, especially Livingston Parish, there's a lot of homes, especially now, that have to carry flood insurance. So that's a good point that you bring up there with the financing. So a conventional loan, is that just a standard straight up loan you put? I don't know, what's the percentage typically that you would put down on a conventional loan?
For a first-time home buyer, conventional, just depending, and there's income limitations. And I want to go back to RD. There's also income limitations for that type of loan. So you just have to be wary of that. So there's different. And
when you say limitations, you mean you cannot make over a certain amount?
Over a certain amount. If it's a family of 1 to 3 versus a family that is 5 or more. So you get a little bit more house that you could qualify, more income for you qualifying. So in regards to the conventional, there's same thing with that. If you're a first-time home buyer, you can get away with as little as 3% down, but there are income limitations on some. And then on one, there is, as long as you've never owned a home before, those income limitations may not qualify. I mean, will affect you. And then most do the 5% down. I have a lot of agents recently that didn't even know anything about the 3% down. So where the conventional loan can be really, really helpful, and you kind of touched on this earlier, a lot of people go through a lot of different changes in life. Louisiana is a community property state. So say you have a couple that may be going through a divorce and they need to buy a home, but they have a home together and they're waiting on it to sell or whichever. All your government loans are going to require for us to pull both spouses' credit. And you have to qualify, whether the other spouse is on the loan or not, you have to qualify with both spouses' debt. Whereas if you go conventional, they have to take into consideration that you're married, but conventional doesn't look at your spouse's debts like a government loan would.
Gotcha.
So
that makes sense.
If someone, makes a good amount of money and they could qualify with both until everything gets worked out, this often helps them be able to purchase, or say they've never bought a home before, but they were married. This allows them to be able to purchase a home and not have to have those extra layers that the governmental loans might have for them to keep them from being able to qualify.
That's interesting. And so there's really loans for every situation almost. And that's a good thing. We want people to have options. We want people to have their own home. What you do is very important in your industry, because from a standpoint of purchasing your own home, it's almost like to put it in terms of myself, when I, and this is going to go way off the rails a little bit, but I'm going to tie it back in, trust me. When I found out I was having my son, my wife was pregnant, we were having a kid. I found out I was having my son. I was 27, I believe, at the time. I grew up that fast. Within 5 minutes of hearing that, I went from, whoa, it's not just about me anymore, to I really need to grow up and be a man and figure out what I'm going to do with my life. I wasn't always this put together guy that you see right now, believe it or not. So I had to do that. And so with owning a home also, you kind of get that I'm growing up, I'm getting out in the world, I'm becoming a woman, or I'm becoming a man with some responsibility. And so it's very important what you do. And I'm very glad to hear that they do tailor make loans for different, because people are not cookie cutters. I say it all the time. Life situations are not always the same, and there are exceptions to things. And that kind of leads me into another point. And I'm going to bring this up. This is, there's a lot of technology in the world now that we didn't have 10 years ago. A company, I'll use a company online called Rocket Mortgage. Okay. And Rocket Mortgage has become very popular. People truly believe that they can go on the internet in 5 minutes, they can qualify for a loan and get all these details. Now, some of the nightmares that I have seen with this is that it never ends up the way it starts out with those type of online mortgages. But more than anything else, and you and I were talking previous to the show about this a little bit, is the human side of doing business with an actual person rather than a program. And that's why I bring that up, is because there are situations in life that a program cannot dissect, but a person can. We used to call it back in the day rehashing loans, back when I would deal with guys that did loans. And they would have to rehash with some of these loan officers a situation. Maybe this person missed a couple of payments on their car note, but maybe there was a reason for that. Maybe this person was in the hospital. Maybe something happened to their parents. Things in life happen, and you can't get those qualifications off of a program because all it's seeing is ones and zeros. And so obviously I would imagine you encourage, and everybody else encourages human interaction, especially when it comes to the one biggest purchase of your life. Most people's, not one, the only one they'll ever make in most cases, but the largest purchase by far that people make is a mortgage. So I would encourage anybody to deal with like a HomeKey Mortgage rather than putting all their faith in a Rocket Mortgage online.
I would absolutely agree.
LeAnn's Flooring by Design, conveniently located on Florida Boulevard in Denham Springs. LeAnn can service all of your flooring needs. Give them a call for an appointment at 523-7004. At LeAnn's Flooring by Design, they stand behind everything you walk on.
In my time as being a loan officer, being in the mortgage industry, it has always been important to me about establishing relationships. Because at the end of the day, if I am just doing a mortgage loan for a paycheck, and we all have to support our families, if that is my sole reason for doing it, then I'm doing the wrong thing. Because as far as the way I look at it is the long-term relationship. I have customers that I did their original loans 20-something years ago. I've got one right now that I'm redoing that I did 15 years ago. I may not be, and I've gone through a couple of companies since then, just because of different things that's happened in my career and advancements that has presented itself. But they have found me, and that's because I built that relationship with them. And not only building the relationship, but just educating my buyers to know that they can reach out to me, and them not to just become a loan number in a system, and know that they can't call me and ask me any question that they may have. And takes me to my next thing is, up until COVID occurred, I attended every loan closing for the simple fact that no matter what my clients went through or what hurdles we jumped to get them to the closing table, if I always felt like if one thing went wrong, that was going to be the first thing that they remembered. And it was important to me to be there for them if they had any additional questions, and just knowing that they could always count on me. And not only that, is that shows them that if I'm going to go to that extent for them, when they're referring out to friends and family and hearing of someone else that may want a loan, they're going to think back to me. And not only are they going to think back to me, they're going to think of that realtor or that agent that referred them to me as well, and refer back to them for them to get that continued business. Because if I'm communicating with everyone throughout the process and being able to get that return referral, then I'm doing justice to everyone in the transaction, versus to just look at it as, oh, I have another loan under my belt. It's about building that relationship for the future loan and the future client. So,
and what I hear from all that is you actually care. You actually care about your clients and that's passion. That's a huge thing, and that is a aspect of leaders. And of course, this show is all about leadership, and that's a huge aspect of leaders that they all share, is that they're very passionate about what they do, and they actually care. So I'm glad you brought that up, because that comes across, and that's things that people need to see and they need to feel out of your business. And I've seen it. I've known you a while, and so I'm glad that you brought that up. That's a very good point. So some buyers, they have issues in different areas of financing. So maybe they don't make enough money, or maybe their down payment isn't where it needs to be in order to get them qualified for the house that they want to get. What if I'm a buyer and I came to you, Tiffany, and I said, look, I've got a house in mind that I want to get. I need to get a loan for it, and I need to know what I need to do to qualify. What would you recommend that buyers stay very cognizant of, let's say 6 months before they start kind of looking into the house market? Is it 20% the magic number for a down payment? Is a work history of so many years kind of important? What would you advise?
There's several things that's important there if you're interested in, say, a first-time home buyer that's just looking to buy, for you to start just being aware of. And I'm going through it with my oldest son right now, is that you just want to make sure that 2 years on the job is typically what they like to see. However, if you have someone who has had established credit and they are looking to buy, and they just say graduated high school and they're going to be paid a salary, then that person could, straight out of college, as long as they have credit history that qualifies them for whichever program that they're trying to purchase on, would allow them to be able to buy as long as they had a salary. If it is someone who is paid hourly, keep in mind if you're making any overtime, that you're going to have a 2-year history of that overtime in order for you to use that to be able to qualify, or they're just going to qualify you on your hourly.
So they would basically base that off of kind of your tax returns or something.
Correct.
I got you.
So say you just have an hourly waged borrower and they made overtime. You want to make sure that if you had another job prior to your current job, so say you had 2 jobs in the last 2 years, but you didn't make any overtime at your previous job, and you're making a whole lot of overtime now at your new job, well, we won't always be able to use that overtime until you have a 2-year history of it, because they want to see that it's likely to continue.
Yeah.
And so unless you have a 2-year history of that, typically we don't know, and we can't just state that you're going to make it, because we don't really have a history of it. So, but a salary would be different. That's something that we would just average, over the 12 months if you have a salary. So say you went from being in one position within a company and where you were paid hourly, and then you were promoted up and you are now salary. So now we won't average your income because you got a promotion. We'll base everything off of that salary versus basing it on your hourly wage and if you made any overtime or bonuses or anything like that, because it's kind of a game changer. So you just want to be cautious as far as like your income. I run into a lot of times where someone is commissioned and they don't always have a 2-year history, or say they were working in sales where they were commissioned and then they decided to go get a job for a month or so where they were hourly, and then they went back to commission. You have to have a 2-year history of that, because you want to show that compensating factor of how strong, your stability as far as you being able to qualify, which right now with COVID, a lot of people are having a tough time with that, because certain businesses, if they're not making sales because they either don't have the merchandise to sell or it's being held up from being able to be shipped here. Just things like that. So it just...
Yeah, that makes total
just
sense.
Being cautious of how you're paid and how you're going to qualify, and just make sure to educate yourself about your situation, because I can tell you in 22 years, I have not done one single loan that was the same. And it is so, so important that even 6 months out from buying, the first step is pre-approval, to where you can take that moment, get with a loan officer, and just go over all the Q&As of everything, even if it's not them pulling your credit. Because I know a lot of people are cautious about, I don't want anybody pulling my credit because that's going to drop my score. It doesn't really, not like whenever you're going to buy a car. Now, if you start rate shopping and you just start, one person turns you down or says they can't do your loan, and then you try and you start getting, multiple people pulling your credit, that's could ultimately drastically drop your score. But if you just have one person that pulls just to kind of get an idea of what's going on, because just to try and help you get an understanding of where your credit is and where you need to be, I highly suggest that, because it would be better for you to be prepared because houses sell so quickly, especially right now in our market, that if you get 6 months down the road and you haven't crossed all your T's and dotted all your I's, and that house comes up for sale, that person that has that pre-approval letter, that's who's getting that house, versus the person that is just now getting pre-qualified and trying to figure out what they can qualify for or what they need to do. So it's better to most certainly always have all that together.
Yeah, I would imagine. And there's a lot of people in a situation where I'll use myself as an example. I'm on salary, but I also get a bonus that in some years can be significant. So it's something that, my job history is such that 21 years in the same company, it'd be real easy to kind of track that. But what you're looking for and what those lenders are looking for is consistency. So you, especially in a bonus situation, you don't want a guy to have a real good year, or gal, where they make a $50,000 bonus and then the next year they make a $4,000 bonus. Well, you can't really average that in as if they were making $25,000 extra dollars a year. You've got to kind of look and say, wait a minute, this was an anomaly a little bit, and you kind of dropped off here. But you bring up a good point in that with COVID and the situation that we're dealing with now, it's not just a standpoint of the sales not being there. I think the sales even from a retail standpoint are good. I mean, they were up, believe it or not, within the last, if you compare it to last year's retail sales. The issue is more of getting product and being able to get it. You brought up a good point there. I am knee deep in that in my industry, because the demand for those products are there. The problem is, if a company has one guy and they have a giant facility, a 1 million square foot facility, they have one guy in that facility that gets COVID, they have to shut that entire facility down. And so getting product from there to here becomes an issue, because they've had to shut down their facility to disinfect everything, which in a case like that could take a week. And it has backlogged everybody. And these are, multi-worldwide companies that are kind of going through that have hubs here in the United States. So,
yeah. And then also, just to catch you there, is we don't want to overqualify someone. So say you were averaging, a $10,000 bonus, and then this year you make a $20,000 bonus. Well, I don't want to average your income on your $20,000 bonus, because then I could possibly be setting you up for failure next year. Because what if you don't have those sales next year? Then I just overqualified you for a house that may potentially cause you a hardship next year when you don't have that bonus, and you have an added expense that comes up and you lose your home. And so it's just educating the buyers and making sure that they're aware and understanding why these guidelines are in place. Yeah. It's not because we don't want you to have the home of your dreams. We don't want to set you up for failure of potentially losing your home. We saw that back in 2010, 2012. You had a lot of people that were losing their homes because they couldn't afford their houses anymore because they were either set up on ARM loans or they were set up in a loan that they didn't even know that they were set up in, and they all of a sudden couldn't afford their house because we had loans 20 years ago, which a lot of people don't know about, no income, no assets, and stated income, stated assets. And it was basically you had a credit score that met the certain criteria, we gave you a loan, and our market crashed,
That's right.
And we don't want to see that again. And so I think that as far as the types of loans that we do and the guidelines that have been put in place by NAM and LMLA, which is who governs our loans, has done a great job in making sure that we continue to stay educated on that, as well as educating our buyers to letting them know it and understand that as well.
I agree. And, you bring up ARM loans and stuff like that. I know a lot of people back in those days, and I'll just sidebar to this, but they would get loans and second mortgages, okay? And on the ends of these second mortgages were these giant balloon payments. And that's really caused a major issue back 2008, 2009 especially, because number one, they weren't really qualifying to begin with. You wish everybody cared like you did, where you made a statement a minute ago and you said, I don't really want to overqualify you because I don't, essentially you don't want that person being forced into foreclosure because they got too much of a house for what they could afford. You wish all loan officers had that attitude. Some, sadly, the attitude is I want to close as many as possible because I get paid per however many I close. So that's awesome. And that speaks to you and what type of person you are. Now, let me ask you this. Let's say that someone does business with Tiffany and they're qualified and we're 20 days out from closing and hitting that closing table, and they make a mistake. They do what, I've always heard that you don't want your credit pulled at all between the time that you get qualified for that loan and the time that you actually close on that loan. True or false?
That is true.
Yeah. And I would imagine even something as slight as pulling your credit for a Dillard's card or Toys R Us card, or you name it, those things can really throw a monkey wrench in there. Is that the most common thing that happens usually?
Yeah. That or someone goes and opens up an account for furniture or appliances for a house they don't have yet. So I try, and again, having someone up front versus, as you stated earlier, someone like Rocket Mortgage, is you have someone there to guide you through those steps, and you can not only see them in person by appointment due to COVID now, or Zoom or however, but you have someone that you can pick up the phone and talk to versus doing something automated or just shooting something through a system. Someone that can actually talk you through the aspects of your loan to understand any restructuring that may need to be done, because every loan has to be customized to the individuals that are seeking the loan, because everyone's circumstances are different.
Absolutely. And that makes all the sense in the world. And I'm sure it's, you go through all these hard stages and it's like, man, we got 2 weeks here. Just don't do anything to just hold off on getting that furniture. But people do it, and it's totally innocent. I mean, I'm sure a lot of them are just like, man, I want to go ahead and get this card so that I can get this furniture. And so don't do that. If if you qualify for that loan, just leave everything alone until after the closing, and then you can go, haywire or whatever. So You talked about referrals a little bit earlier, and very important in the mortgage industry to begin with. I mean, whether you're a realtor or you're a loan officer or you name it, a closing company, who would you say is your best referral source? Like when you network, who are the people that you really like to network, talk to, let them get to know Tiffany and HomeKey Mortgage? Who is the most valuable? I know all people are valuable, but who is it that's like, man, I need to meet that person? What type of industry? Is it realtors?
I guess you could say agents, but really I don't really have one that
work with everybody. Even
I
paint
work with
salesmen.
anyone.
Paint salesmen are great.
I work with anyone that basically just has the same work ethic as me. Those are the ones that stand out. I mean, I have realtor partners of all different aspects. Yeah, I mean, I have referrals that come from car salesmen. I have referrals that come from just even past companies that I've worked for, just because the people that I dealt with when I was there know the way I do business and they like it, and so they refer business to me. I have people that I have met within leadership, just being part of Rotary introduced me to a lot of people. Actually, how McHugh and I got really close. Someone else that got really close to through leadership, met you. Just anyone that shares my same work ethic of just making sure that they're not just there to, at the end of the day, get a paycheck. They're actually there to do good by the customer. Those are the people that I want to work with, and those are the people that I do work with. And it's worked out pretty good for me to be sitting here. I mean, in my industry, to be 22 years in, we're considered dinosaurs, basically, because not a lot of people actually last as long as I have in my industry, because a lot of people are like, oh, I can make good money doing that, and they don't realize all the work that goes into it. And so they get in there and they make, a quick few dollars, and then they pan out and go and do something else. Right. And so there's not many of us that are still left out there that have as many years probably that I have under my belt.
And I think that's a huge thing that everybody should look for in any company they do business with, is longevity. There was a time that I'm sure Tiffany was 2 years into the mortgage business, and thank God for those people that took a shot and a chance with Tiffany, and it obviously worked out. Same thing with me in my business, but it's hard to replace experience, and the reason for that, especially in your industry, I would imagine, is the fact that in your industry, it is so serious. It is such a commitment that if you don't really deal with someone that has experience, vast experience like you have, what you run into is hurdles that maybe can be jumped. For example, don't get jumped because maybe that person just doesn't have the experience. So that's something that you bring to the table that I would encourage any listener of this podcast to seek you for, if nothing else, would be the experience. SportNCenter in Denham Springs is your one-stop shop for team sports equipment, school uniforms, and promotional goods. Conveniently located next to the Antique Village since 1977. SportNCenter, your business means everything to them because your name rides on everything they do.
Well, that and the reason why me and my partner decided to go the realm of going a broker versus an actual lender, or being affiliated with a bank or some of the other correspondent lending sections of mortgages out there, is we decided to become a broker. That way we can actually work with several lenders and actually look across the board to see which particular program and which particular lender that we have best suits our customer in making sure they do get that best deal at that best rate, and not just having this spreadsheet of this is the loan programs, this is the rate, this is the qualifications for this. We want it to be able to have that flexibility and have some of that red tape kind of pulled back on what programs we had available, and making sure that we had it available across the board with multiple of our lenders that we are affiliated with, and be able to get them not only that program that suits them, but at the best rate that we possibly could as well, instead of just having rates just set across the board for each program.
Gotcha. And that makes a lot of sense. So you brought up Rotary earlier, and you're a very active, community-minded lady. You're a Leadership Livingston graduate. You're a very active Chamber of Commerce member. You brighten people's day with your buzzing the Livingston Parish, town of Livingston Parish, little gift baskets. Thank you for that, by the way. And if you don't know what those are, check it out online. Tiffany really brings a smile to people's faces, and that's something that is a part of your personality that still blows my mind. Is just you make people feel like you really do care, and you go out of your way for people, and that's an impressive thing. Now, how important is it to balance your life as a business-minded woman and giving back to your community? How important is it to have that balance? You see a lot of people these days, and they're pushing it. They're going 90-0 in that business world, but they're not stopping, and they're not doing enough for their community. What does it do for you? How does it make you feel personally?
Well, I lost my mom at a very young age, and I guess it's been a lot of those adversities that I've gone through that kind of is that part of me that wants to give back to my community, and then just set the example for my children. Not only am I a wife, I'm a mother of 5 beautiful children, and they are my team. They're as much as my team at home as my team at work, and that balance between the two is very important. And just setting an example for them and letting them know that there is someone out there that cares. There is someone out there that is willing to help and that doesn't have an alternative motive for it, that there still are genuine people out there. And so at any and every opportunity that I have, I want to give back, and I want to show others that life's going to throw you a lot of things, but the good thing about it is you are given that one life, and it's your choice what you choose to do with it. And I could have took every wrong path that was thrown at me growing up, said, oh, I didn't have a mom, I didn't have my dad in my life growing up, and took a different route. But I chose to take the right path, and just seeing that, and just the mentors that I had growing up, just showed me that if you do good and you embed that in others, you may not always make that change in that one person, but if you keep on doing it, eventually you're going to make that change in one person. And as long as you're changing one person's life, you're making a difference. And
that's exactly right. I couldn't agree. I can't even add to that. That was very well said, and true, and again speaks to who you are. So on that subject a little bit, certainly you've got to have some hobbies. You got to have some things you like to do outside of bringing a smile to everybody else's face and doing what you do in the home lending world. What do you like to do to unwind?
Just hanging out at my house with some friends, my family, all about my family, and just really, I really stay busy a lot just because it's what I do. I don't know. Yeah. I guess it's just, I have to have somewhere to tunnel all my energy that I have all the time. And my family thankfully enjoys doing that with me. I know one thing that I do every year for my birthday since they began doing it is the trash pickup. It actually always falls the Saturday after my birthday. And so my kids even come out with me, and we go and we try and clean up Livingston Parish and pick up trash. And that's one of the programs through the chamber. And I just love having my family by my side and sharing that same passion of giving back to our community, because we all live here. We all make our living here. And if we can make it beautiful and get others involved in helping it stay that way, then we're going to continue to grow. It's going to continue to help all our businesses grow. And we're all going to grow as well, because we're going to learn about other individuals, things that we didn't know, and just keep that positive going.
I think that's, yeah. And that's, as man, I don't know. I used to think I was kind of out of the realm, because I'm a person that is I always have struggled with balance. So you push and you push, and anything I do, I try to give over 100%. And the issue with that becomes something somewhere suffers. And so, throughout my life, that's something I've had to work on, is balance. And I'll never be that guy that can just sit down and watch TV. It's just not me. And I'm fond of telling my wife that's just not how I'm built. I'm just not built to sit down and watch a movie. Now, I can watch the movie and do something else at the same time, and believe it or not, I'm a master of multitasking, but it's something that typically strong performers and high performers struggle with. And you seem to have found a good balance there, and I look up to you for that. And maybe I can balance a little bit better in the future on that. Now we're going to have a little fun. And what I did was I went online and I came up with some fun facts for us to discuss. And these are things in the mortgage lending industry that I just found interesting. And so I'm going to talk about that with you. So in the mortgage lending industry, the loan percentage down, the most common percentage, I'm sure you know this, but was 10%. So I found that interesting. I always thought it would be 20, but 10% down is pretty much the most common. That's McHugh's phone ringing, y'all. Here's an interesting one.
Actually, to go back to your balance, that's actually, I have to set an alarm at 3:00 every day for whenever my kids were in school to make sure someone was getting my girls off the bus. So that's part of my balance.
Oh, that's awesome.
Making sure someone's there. So that's what that alarm was. So yeah. I know school's not in right now, but I leave it all year long. That way when school starts back, I don't forget. That way I keep myself in that rhythm of knowing 3:00 every day.
That's the look, and there's nothing wrong with that. My wife will tell me, we've got 3 kids, they're all in high school, so they do band, they do all these things, and there's a lot my wife has to do that thank God that she's the high performer she is, and handles a lot of these things that would drive me totally bananas. But she'll tell me, well, you need to do, she kind of tells me you need to do this and this and this. And I'm like, text me because I'll never remember it off the top of my head. And I'm like, if you don't text me, I won't be able to write it down later on, because I go through my texts at night and I work off of lists. That's how I've always worked. Old fashioned piece of paper and a list. And I cross that puppy off every day.
Every morning.
That's it. And so anyway, I get it. Here's another interesting fun fact. So according to CNN Money, more than a third of the people they surveyed had no idea what APR was, annual percentage rate. They didn't know what that meant. And that's another good reason this podcast is so good to do, is because we're educating people here. We're not only educating them on how great you are, how great that your mortgage company is, but we're also educating them on facts like different types of loans and things like that. They may not know. Annual percentage rate was something a third of people, 33%. I never would have thought that.
So what's an APR, Jim?
So an APR is an annual percentage rate that every year, I'm trying to think how I could word this. So every year you have a rate of, let's say 5% is your APR. So every year your rate that you pay on interest is 5%. And then that compounds every year. Is that correct? So the next year is 5%. And the next year it adds another 5%. Then tell me.
An APR is your annual percentage rate. Basically, you pay some fees up front that affect your APR. So a lot of people, whenever you get your initial disclosures when you're buying a house, you'll get a loan document that is called your loan estimate. And on that loan estimate, it will give you an interest rate and it will give you an APR. Some of your costs that you pay up front are tax deductible to you if you itemize, consult a CPA for that. But they take those fees and they average them over the life of your loan. And as they amortize those over the life of your loan, that's how they calculate your APR, because it's the amount of money that you would pay over the life of your loan, if taking into consideration the calculation of those fees on top of your loan amount.
And this is why I am part of the 33% people. I had no idea.
Yeah.
Very interesting.
So
I did not know
I have so many people that are like, I thought you said my interest rate was this. What is this? And they think that the APR is something that affects their payment, and it does and it doesn't, because your APR and how your interest is calculated is your interest is calculated off of your balance. But if you have some fees that you pay, because those fees are tax deductible to you, if you itemize, again, consult a CPA, averaging them over the life of your loan. Yes, sorry. Thank you for finishing that. That is how they come up with your APR. A lot of people choose to write that off all at once. A lot of people tend to do it over the life of their loan. If it's your forever home, that's something I would suggest. Average life of a loan before someone buys, sells, or refinances is 3 to 5 years. So most people do it all up front. So, but that is how you get your APR.
Interesting. And also why you never listen to a paint rep when it comes to financing. You contact this lady right here. So here's another interesting fun fact. In Scotland, y'all probably know this, but people paint their front doors red once their house is paid off. Interesting. Why? I don't know, but they do, in fact, paint their doors red. So if you're in Scotland and you see a red door, it means they follow the Dave Ramsey program, probably. Very good. In October 1981, mortgage rates reached 18.6%. A $250,000 mortgage had a mortgage monthly principal and interest payment, you ready for this? $3,896 a month just in principal and interest. As astronomical as that rate sounds, people were still buying homes, and it was considered a good investment. I would have, that seems crazy right now, does it not? Especially with rates being as low as they are right now. But yeah, that's $4,000 house note.
22 years ago, I was giving people 8-9% interest rates because that was the lowest that was offered at that time. And I mean, I had people just praise me because I was giving them that type of interest rate. And now to have people where back in March when rates just absolutely plummeted and I was giving people rates as low as 2.75, 2.875, and they were like, no, I think it's going to go lower. And I'm like, no, I don't think you understand. This is low. But honestly, in the refinance booms that we've had over this past several years of interest rates kind of fluctuating up and down, but as hitting rock bottom as they have in the past few years, I've actually done less refinances when they were at their lowest than when they started rising. It's like people are like, oh no, rates are going up. But what they don't realize is by the time that the general public hears that interest rates are going down, our market has already adjusted to that. So rates are already what they are going to be.
Right.
So that's just something to keep in mind also, is that just because you hear, like a lot of people are like, oh, interest rates are going to go to zero. Just because they drop
that's the interest rate to the bank, not the interest rate to the consumer.
Correct.
So it's different.
Correct.
The bank is borrowing the money at zero. Correct. But John Q. Public is not going to get the money at zero. The bank's got to make money.
Because they have to be able to pay their employees to be able to process that loan, to be able to service that loan and take care of all the responsibilities of your loan to make sure that you're getting the right loan and everything.
Yeah, and people got to make money. I mean, you don't fault someone for making a profit. There's nothing wrong with that. And so your advice obviously would be, if you like the rate and it sounds good to you now, jump on it, because it's kind of like time in the stock market. You don't ever know. It could be 2.8% right now, and someone says, yeah, but I think it's going to go to 2.6. Well, maybe not. Maybe it goes to 3.6 and you just cost yourself money. It could go both ways.
Yeah, and then it goes back to that relationship, that you have with your buyer and finding out what their goal is. If their goal is just to get a house and pay the minimum payment over the life of the 30-year loan or the 20-year loan, just to pay whatever to get by, then yeah, be very rate cautious. But if your main goal is to get that house and pay it off as soon as possible, most mortgage loans that are done nowadays is a simple interest loan. So you can pay more towards your principal balance to pay it off early. You're not going to be penalized. So then you really don't have to worry so much about the thought of, in the longevity of what you're going to pay at interest. If you're steadily hitting down that principal every month, your interest is only going to be paid on that principal balance. So every time you make a principal payment, that interest is going to go down more, and your principal that you're chopping away each month is going to go up further.
Yeah, so you can make like one payment a year, I've heard, and it actually knocks like 5 years or something like that off your note. One extra payment.
Just one extra payment towards principal.
And I would advise anybody do that, even, bi-weekly payments. If your mortgage is due on the first every month and you start paying it every 2 weeks, just divide the payment in half, and every 2 weeks you make a payment, you will knock a significant amount off. And really, you're investing the exact same amount of money. Correct. over that.
Because you're attacking that principal every 2 weeks versus every 30 days and allowing that interest to accumulate on that balance.
Exactly. And an easy thing to do. I started doing that a couple of years back, and I've seen a huge difference. My principal just ticking down, right there. I'm paying the same amount. I'm just doing it every 2 weeks instead of every month. It changes nothing in my life at that point. Tiffany, let me ask you, how can people get in touch with you if they want a loan, which hopefully after they see this, they're going to be like, we want to deal with HomeKey Mortgage and Tiffany. How would they find you? You have a website, you have Facebook, you have any of these sorts of things that people can look you up?
Pretty much just Google my name and it'll pop up multiple pages.
Google Tiffany Sicard and
or you can call 225-341-0660 is my cell, or you can call office line, also rings to my cell, 1-985-345-6686, and I can help you, or any one of my team members can help you. When we were building my team, again, I made sure to put people around me that shared the same work ethic to me, and where a lot of companies during this COVID have been closing their doors and losing employees, we've actually gained employees. And I have we've expanded recently. I have 2 loan officers. I have Alicia White. I have Jason Furlong, and I recently hired an in-house processor, Miss Mickey Young. And like I said, we're just one team with the same plan of making sure that every home buyer is as educated as possible, and that they feel like they are getting, or they know, not just feel like it, but they know that they are getting the best deal possible for them, as well as my agents and realtors and people in my community that I deal with, just knowing that I'm doing right by their clients.
Fantastic.
our referrals.
Well, thank you for sitting down and talking to me today. I enjoyed it. You're definitely a leader. You're a community-minded person, and I appreciate you sitting down and telling a little bit about your business. Of course, I recommend people go see you for all their home lending needs. I would like to thank the master of the op-ed himself, McHugh David. If you hadn't checked out his op-eds in the paper, check them out. They're pretty good. For engineering this podcast, this Local Leader podcast, the always awesome Tiffany Sicard for being my guest, the Livingston Parish News for the space, and all you viewers and listeners for your support. Please follow me on Instagram, like me on Facebook, subscribe to me on YouTube, and check out the website at paintpodcast.com. It sure helps me out. If you're interested in sponsoring Local Leaders, the podcast, or appearing on the podcast, please reach out to me by emailing Jim at paintpodcast.com. Until next time, I'm Jim Chapman, reminding you to love your community, support local business, and keep leading. Thanks.